but you don't buy it for appreciation.
Exactly.
It's even worse appreciation. You want to be able to, you need to have multiple exit strategies. And if there's not a multiple exit strategy,
All right, welcome back, everyone, to the Passive Road to Retirement podcast. I'm very excited about our guest today, personal friend of mine, Holly Williams, who is the principal at KEEPMORE.com. Holly's been a real estate investor for over 20 years. To date, KEEPMORE.com has co-syndicated over 18 multifamily apartment communities, encompassing over 4,500 units with a valuation of $400 million. Holly is committed to improving financial literacy for all Americans and is the author of a new book, HiddenInvesting.com, What the Wealthiest 1% Know That We Don't. I've got a sneak peek at it. It's a great read. We're going to put in the show notes here a link where you can get the book. And Holly's been very generous. We'll give you a discount code, and it's a free copy of the book. You just need to pay shipping and printing. It's about $9. So it's a great deal, and I suggest everybody go get your copy. Holly, welcome to the show, and thanks for being here.
it is so great to be here, Andrew. I appreciate you having me.
Oh, no problem. No problem. And by the way, before we get started, congratulations on the recent Forbes article. I took a look at it. Take control of risk by buying real estate for cash flow. A lot of golden nuggets in there.
That's the whole thing.
That's right.
That's the motto. And it took me a while to learn it. But
well, Holly, for those who don't know you, if you could just give us a background about yourself and a little information.
Sure. So I actually grew up down in Texas, in Houston, and went to school in Lubbock. And I was really spent my whole early years in Texas. And in 1991, I got a job offer to come to New York City, and it was supposed to be for a year. And it was with Arbitron, which is now part of Nielsen, the television ratings people. And so I said, why not go for a year? And I ended up here, and I just ended up loving it. And they stopped asking me if I wanted to go down, back down to Dallas after 3 or 4 years. And I've been here ever since. So 6 years later, I met my husband, and the rest is history. So I've been in New York City, built a life, did everything you were supposed to do that we're taught to do.
Right.
And then my parents started getting old. And they were down south still. And I started managing a lot of their affairs, and it was a mess. And I realized how much tax they were paying. Yeah. I realized how little money they had, how their income, your income doesn't need to go down when you retire unless you want to downsize to a little bitty apartment and never go anywhere.
Sure.
So they were paying almost as much tax as I was paying, and I was paying a lot. And it really messed them up. And they were depending on the 401k, just like they teach us how to do it. Yep. And so if I hadn't been around and hadn't, had the means to help them a little bit, it was heartbreaking, actually.
Yeah.
It was heartbreaking because I know that they wanted to, build some generational wealth. I know that, they did everything you're supposed to do. Right. And so I began to search for a better way. About the same time, a friend of mine got into multifamily syndication. And he needed investors. And I said, what the heck? And I invested with him. And that was when I began to understand that the wealthy have access to things that we don't have, to investment opportunities that we don't have. Right. And that Warren Buffett is not necessarily going onto his E-Trade account and buying stocks, right?
Right.
And that there's a whole world of private investing. So now I'm up to probably 20 multifamily syndications.
Oh, wow.
It builds, I left my job in 2018 when from just those passive investments, I was able to pay more than my bills.
That's
and
great.
seriously. And the principal, see, here's the thing with stocks. You have to sell the stock to get the money.
Right.
And we're all taught, we're fed all of this information and it's myths.
Mm-hmm.
It's not necessarily a lie. The stock market really does return on an average of 10% a year. Problem is, it's 10% like this.
Yeah.
And we have in our heads, okay, so that $1 million is going to give me $100,000 a year income. And that's couldn't be further from the truth.
Mm-hmm.
Because almost all of us are going to be in it when we're down. And that 401k is taxed as regular income, not even as capital gains. So there's a lot of the fine print that we're just not taught and is not universally known. And that's what my book is about. And that's what my mission is about. And multifamily is my very favorite passive investment for a number of reasons, which we can talk about.
Just like your website, get more, earn more, keep more.
That is exactly right. Our government is not a very good steward of our tax dollars.
Yes.
And I am much better able to help people. I mean, if you had $1 million, why would you give it to the government? And you wanted to do something really good with it, right? Help the community. The last place you'd give it to is the government, right?
Right.
But yet we do, and it's really unfortunate. And one of the things I talk about in my book is the tax code and how it's the law of the land, right? And who does not agree that we should follow the laws? Well, in that tax code, there are all kinds of incentives for us to do things that the government wants us to do, create jobs and that sort of thing. So it's actually very patriotic what we're doing. There's a lot of real estate investor benefits and incentives for real estate investment that are in our current tax code. And it's a really great thing because we're really helping people. I mean, like really helping people.
Oh, yeah.
Because you give away money and you're still going to be poor because it's in here.
That's right. Mental.
It is.
That's a great point. Would you mind just explaining maybe some of the tax benefits, you've seen people get from syndications?
Well, sure. I'll tell you about myself. I knew real estate was a good investment, and we had a 4-family house in Brooklyn, and it throws off a nice little income, and we were paying taxes on that income because it was a family home and it was paid for, and it's kind of a long story, but when we were getting maybe $30,000 of passive income or whatever a year, which was basically pretty great. Only I was paying $20,000 in tax. I mean, I'm sorry, $10,000 of it in taxes.
Yeah.
Basically. I mean, even probably more. I was paying half of what we were making in taxes.
Plus property tax.
I'm telling you. And what the big aha for me was that when you invest in real estate, you are able to, or any business expense, you have a business, you buy a computer, the IRS has a thing that is the life of that thing, whatever you buy. And so the IRS treats an apartment building as an investment expense. And so all of the things, the parking lot, from the parking lot to the roofs to the stoves and the refrigerators have a depreciation life. And so what happens is that you can write off that depreciation over a number of years. And the new tax law came along and made that even better. But back in 2015, I was amazed that, for a $100,000 investment, you don't even have to have that much, even a $50,000 investment, I was able to get $50,000 worth of depreciation losses on my taxes.
Incredible.
And I was able to get monthly income from that investment. So I was able to make on a monthly basis on that investment about $7,000 a year. But I was able to offset those taxes with the paper losses. So what happened at the end of the year, instead of getting a 1099 like you do with stocks or whatever that says, oh, you made $7,000, you owe capital gains on it.
Right.
I was able to get, oh, you lost $50,000. You gained 7, but then you lost another 50.
Yep.
And oh, by the way, there are other passive losses that the government lets you, offset. And oh, by the way, that $30,000 that you're getting from your building? Well, you can use that $50,000 to offset that. Mm-hmm. So, $100,000 investment. And before I even did anything, before anything went up in value, before anything happened, I was able to defer taxes on $47,000, $37,000 worth of income.
It's incredible.
So immediately out of my pocket. Now you're deferring it, but you can keep rolling that over. And if, my parents had just known that, they would not have had to sell their stocks at the bottom of the market to live. Mm. And they would have been able to do what I'm doing and live off of the passive income from my real estate passive investments. You don't have to do anything.
Yeah, exactly.
That's the whole beauty of it. With our building in Brooklyn, we have to paint, we have to get tenants. I don't have to do anything.
Mm-hmm. Yep.
And then not only that, I've learned that the more zeros something has in the back of it, the safer it is.
Yeah.
If I lose a tenant out of my 4-family house, I'm losing 25% of my income. If I lose a tenant in a 210 unit apartment complex, it really isn't that big of a deal. And it gives me a chance to renovate it, make it nicer and up the rent for the next tenant.
Mm-hmm. Exactly. Great point.
And so that's just what it is. And so I learned that you could buy, when I used to think real estate, I used to think I'm going to buy it and it's going to increase in value. You see, we're taught that our biggest source of wealth is in our home.
Mm-hmm.
It's insanity.
Yeah.
I own my home, and they're not against owning your home, but the home is, honestly, it's a liability because you've got taxes, mm-hmm. You've got, all kinds of expenses to keep that up. And yeah, can you make money with your primary home? You absolutely can. And there are lots of reasons to do that, but it should not be your primary source of wealth.
Agreed.
Because real estate is cyclical, just like anything else.
Yep.
However, if you buy for cash flow, you buy things that are already cash flowing. I'm not talking about getting an old rundown thing and throwing out deadbeat tenants and all that. I'm talking about you can buy in a lot of parts of the country an apartment complex that already is cash flowing for whatever reason. We're buying one right now, and he's had it's a single owner. Lots of these are owned by families.
Yeah.
He just doesn't want to fool with it anymore because he's older and he lives in Nashville and he doesn't want to drive up to Evansville, Indiana, where it's right. So there are all kinds of reasons people want to sell, and the secret's finding those. But if you can find them, and lots of people do, mm-hmm. You have an opportunity to invest in one, and it is cash flowing, and you do trust the people that are doing it. And that's what happened to me. I was able to buy that, and then I saw, wait a minute, I can get the same benefits as if I was investing in a house, a rental house. Only I don't have to find it. I don't have to fool with the tenants. I don't have to get the loan. I don't have to do anything. Mm-hmm. And I just get a check every month. And then I get the tax benefits of owning real estate. So when I found that out, mm-hmm. That's when I said, you know what? I'm not going to do what my parents were doing. And I slowly moved money. I'm 59 years old. So those of you who are younger, God love you. Listen very carefully.
Yes.
Because it's not what it seems. Mm-hmm. I still am in the stock market, nothing against the stock market. But they're telling you to hold for the long haul and be in it for this, that, and the other thing. And they are buying and selling and trading in nanoseconds, and you're paying for all of that.
Mm-hmm. There's a reason they
So,
tell you to do that. Mm-hmm.
correct. And they are making obscene amounts of money. And I love money, and I think everyone should make lots of money. That's not the problem. But the problem is most of the people, almost all the people, I got an MBA and I didn't learn any of this.
Right.
I learned nothing
Yeah.
about any of this. And my investors, when I first started doing my own deals, I pick up the phone and I start calling people that have lots more money than me.
Mm-hmm.
And they're like, Holly, do you want a job? I'll invest in your market research startup or advertising. It's just, but I lost money in a real estate deal. They think I'm buying land and building apartments, which is a whole different thing. That's buying for appreciation.
Yep, exactly.
So, that's the difference. And so what you want to, I didn't know that you could do this, and apartment complexes are really one of the few places you can.
Yeah, totally agree there. That's my favorite investment. I'm in the stock market a little bit as well, but, very heavily in real estate. Just for, like you said, the benefits and the cash flow. I can't find anything that even compares.
I tell people that, if you think about retirement planning, every financial calculator, every time you meet with almost any investment professional, the very first thing they ask you is, how long do you expect to be retired?
Mm-hmm.
That is what they ask. You see, our whole system, everything that we're taught, is designed for us to die broke.
Right.
It's designed for us to sit, and that's what was so heartbreaking. I watched, my father had a little notebook, and he was calculating every month how long he could stay in the house before he would have to. It's just horrible.
Yeah.
And so, and it's even more horrible that he did have an IRA with very little in it.
Mm-hmm.
And now it's got more than when he died in it. And I've had to take distributions, because the government makes you take distributions.
Right. Yeah. I am.
Even when you inherit an IRA, and they're talking about changing the laws, and it's going to be terrible, but that's another topic.
And there's no reason to wait till 65 to retire. You can do it early through passive real estate.
And so, no matter what the government does, no matter, we underwrite we buy our cash flowing apartments with the idea that the income is going to go down sometime at 20% or whatever, and we raise enough money for investors for a rainy day, and then if we don't use it, we return it. And so all of those things are so important, because real estate is about timing,
right?
And you can't time the market, And so if it's cash flowing today, and something like COVID hits, well, we were prepared. Some of our apartments, like we went to quarterly distributions as opposed to monthly, just to be safe, so we could save the cash, because we thought it was going to get a lot worse. But what we found was it was a ton better than we ever thought it was going to be.
Mm-hmm. Yep.
And because people still need to have a place to live.
Yep.
The people that are working Americans still had, most of them had jobs, and most of them paid their bills.
Mm-hmm. Exactly.
Continued to do so.
Mm-hmm. Well, Holly, with all that going on, I guess, what are you most excited about right now in the real estate world? What excites you right now? And is there anything that, keeps you up at night as well?
So I'm most excited about the migration. So my background is demographics and what people are doing and who lives where. And I'm very excited about the migration that's happening. Now, the bad news is I live in New York City, where they're leaving. Right. So my, net worth has gone down, I'm sure, however, I think someday it's going to be okay, and I don't need to sell.
Right. And you're still cash flowing, right?
Correct. And so we are seeing, though, I have a place up in Woodstock, New York, in the suburbs. Anything like 90 miles or 100 miles from a big city is booming. And there's a huge housing shortage. We also have a project that in Orlando, that's the same thing. I mean, you can't buy a house in Orlando.
No, you cannot. It's
right.
Crazy.
There aren't any to buy. And then if you want to build, it's going to be 12 to 24 months if you can do that.
Right.
And so there's nothing to buy, and there's lots of people that want to move there. And what do? So we've switched some of our strategy to Class A apartments, A- apartments, a place that maybe you and I would want to live for a year while we built a house or look to decide where we want to live. And I don't see that changing, because once people we lost a tenant in Brooklyn because during COVID, they took the baby and they went to his parents in Columbus, Ohio to be with them if they were going to all have to sit at home. And then they got after doing that for 6 months, they're like, why are we living in New York City when we can have all this space? And so now they're looking for houses in Ohio. And so there's a lot of that going on.
Well, for Orlando, just, so everybody knows, there's 900 people a day moving to Central Florida right now.
Insanity.
It's incredible. Yeah. Incredible.
And Mario, I always call him Mario, but Cuomo here in New York thinks it's because of the weather.
Right. Yeah.
He really does. He's like, Florida, they're moving for the weather. And it's like, oh my God, how out of touch could you possibly be?
Yeah, exactly.
Unbelievable.
It's crazy.
I know, right? And so that's what I'm talking about, So we pay taxes and they don't know what they're doing. They really don't know what they're doing.
Exactly. Yep. So keep as much as you can. Exactly. I agree.
That's exactly. And the law allows that.
Yeah. Yep.
But see, the wealthy have the good CPAs. The wealthy know how to do this. And you don't have to be wealthy,
right,
to do that. You just need to understand that we're not teaching critical thinking in schools. And that most financial advisors are there to sell their company's offerings.
Right. Yep.
That's what they are there to do. And there's nothing wrong with Fidelity's offerings. There's nothing wrong with E-Trade's and, whatever, Maryland, whatever. But they're not there to, tell you about alternative investments that they're not going to make a commission on.
Now,
and the only thing we hear about alternative investments is Bernie Madoff.
Yeah.
Here that by the time a company like Coinbase goes public, the wealthy have already invested and they've already gotten out.
Yep. Now,
they're already done.
For your deals, do you have to be an accredited investor to invest with you guys? And also, if you could maybe just explain, to people what that is.
Sure. Well, it's another hurdle that Wall Street does not want you to invest privately, right, under the guise of protecting you from nefarious characters. But you can buy a stock that's run by criminals, and that's okay.
Any time of the day.
Nobody on Wall Street has ever done something illegal.
Right, of course not.
Investors have never lost money on a stock, right?
Enron rings a bell for some reason, but
I know, right? Unbelievable. So anybody can do that. But so they figured that if you're rich in their mind, that you're smarter, which is just so unfortunate. Another unfortunate myth that we're forced to live by. But what that means is that you need an income to be an accredited investor and have access to a lot of investments. You have to be you have to make over $300,000 a year between in your household, or if you're single, I think it's 200, and or you have to have like $1 million net worth outside of your primary residence. See what I'm saying? Outside of your primary residence, and they're telling you to get wealth in your primary residence. I'm telling you. If anybody, I urge you to do your own research. I want you to do your own research. And if I'm wrong, please tell me. But I don't think so.
No, I agree.
So what we're told to do is not necessarily the best for us, even though they are fiduciary and all that. If all I know is my world, it's not that they're bad people either. It's just that they don't know about this stuff either, because they went to business school and then they went out of college. They went to go work for Merrill Lynch and they didn't teach them any of this.
Yeah. Went through their training and that's all they know.
And so they're going to offer you the best Merrill Lynch products that they can, or Fidelity products that they can. I just opened my daughter an account with Fidelity, and it's not like Fidelity's bad. It's just that you need to understand what it is and what it isn't.
Yeah, exactly. Now, you've done a lot of deals in the syndication world. Did you ever have one that didn't go as expected? And, if so, what did you learn from that, or what did you take away from that?
So almost all of them have had something that has not gone as we expected. And that's why you have to make sure you're overinsured. You have to make sure that your insurance has income loss provisions, right? So if you lose that income, the insurance covers it in case you've got a tornado, especially down in Florida with hurricanes. You have to make sure that you raise enough. You have to make sure it's cash flowing. You have to make sure that it is that you raise enough money for the business plan. You have to have, so this is, I urge I hear some people say, it's stupid to go to college. It's stupid to do the IRA. It's stupid to do the 401k. It's stupid. You're wasting your time. I don't subscribe to that. That's just been my personal experience, because I know that I would not be able to have conversations with investors like that I talk to every day and negotiate with brokers and bankers and all of that if I hadn't had the experience of being in business. Because at the end of the day, there needs to be a business plan, a solid business plan for any apartment any deal that you're evaluating. And then you have to have people that are running the deal, that are making the decisions, that have been in business, have run P&Ls, have managed people, because all of that is executing a business plan, and something's going to go wrong. And it could be that the management company needs replacing. It could be a gazillion different things. But what you want to make sure of is that you have enough prudent reserves, that you raise enough money. It's just the same thing as your personal life, right? You should always have a year's salary put away in case you lose your job.
Exactly.
I mean, if somebody's just starting out in investing, that's what you need to do.
Yeah.
You shouldn't be doing anything until maybe the 401k match. That's fine. But
yeah, they're matching.
And it's the same thing with an investment. You want to make sure that the finances make sense, that the money coming in and can be covered, and that they are set up for being able to pay those expenses, carrying costs, if you will, the loan and the insurance, all the stuff that you can't change, before they get into trouble. And we try to do at least 20%.
Oh, wow.
Oh yeah. You need at least, some of our deals are like, we call it stress testing. So some of our deals are stress tests. They're already cash flowing. They're already at 92% occupancy or whatever, but that occupancy economically can go down to high 50s or something before we're in trouble. That's what you want. So you want to look at things like that. So that's a long way of saying that, yes, we had one that had a hurricane and a fire.
Oh, wow.
And out of 5 buildings, 3 of them were uninhabitable.
Wow.
So we helped those people find places to live. This was in Houston that never floods, Hurricane Harvey.
Okay.
whatever. The whole town was down. So, but what happened was we had good insurance. We suspended distributions to investors for 2 quarters. We got it fixed. Basically, we had a brand new asset at the end of the day.
Yeah.
When all this was said and done, and there's a housing shortage in Houston, we filled it up in 5 minutes. We kept it for another year.
Mhm.
It increased in value tremendously because, again, there was a housing shortage in Houston, and we were able to sell it for tremendous returns to our really great. It was a great project. It was a big success,
Mhm.
but it was basically underwater and burned up.
Yeah.
For a while there. But you see, we were able to weather that, no pun intended, because we knew that it will never go perfectly.
Mhm. Yep.
And so you have to understand that. But it's not going to have it's very pedestrian usually. It's not a, fast and loose thing. It's a slow and steady,
Mhm. And that's
you
why
know.
multifamily beats single family, right? Because you're able to go in there, increase your net operating income, turn it around, and the value you got out of that is much more than one door on a single family house.
If you can increase the rental income if it's a 200 unit apartment complex and you can get $10 more in rent, you've just added millions to the value
Yeah,
of
exactly.
the asset.
Yep. That's why
And
I
you
love
really
multifamily.
have. And because that's the way these things are valued.
Mm-hmm.
And so you're not dependent on what the market's going to do,
Yeah.
on
Yep.
what the government's going to do, on what the city is going to do.
And you don't need to sell if it's cash flowing, like you had said before. That's the great thing about it. You just keep it until the market turns around.
Well, that's exactly right. And so we have definitely hit lots of hiccups.
Mm-hmm.
Some of them are worse than others. But then COVID. I mean, COVID affected everybody. Don't get
Oh,
me
yeah.
wrong. We didn't.
Mm-hmm.
Nobody got out of this thing unscathed, and it's not over yet.
Yeah.
But we have, most of the tenants in our apartments they care about their credit. I mean, eventually they want to buy a house or do whatever,
Mm-hmm.
and they care. All that is deferring the rent. They still owe it,
Right. Exactly.
and they know that. So.
Mm-hmm. That's great. Well, I just have a couple more questions for you. So, how has passive income affected your family life? Personally, have you noticed a big difference from going from the full-time job to being, 100% passive now?
Well, so I found out that there's this thing called a real estate professional designation that our government gives us. So if you are that passive loss that offset the income from my rental property. Well, if you're a real estate professional, you can uh, offset lots of other types of income. And so my husband is a retired sergeant from the police department.
Oh, nice.
And he's actually managed our rentals because we have a couple more
Really?
too. For years and years, since he retired in 2007 to be Mr. Mom.
Nice.
So all these years we could have, but anyway, whatever. But the long and the short of it is that I left my job and started doing this full time.
Mm-hmm.
So that because if you're in the real estate business, there are tremendous incentives to do these things. Now, if you're not a real estate professional, there are still tremendous incentives
Mm-hmm.
to do this. So, and the government lets you carry forward those losses that you don't use. There's lots of, you need to talk I'm not a tax, let me just preface this. I'm not a tax person. I'm not a financial advisor. I know nothing. Everybody should research everything I'm saying. Do not believe me.
Right.
Do not believe me. I'm just a person and I could be all wrong. And if I'm wrong, please let me know because I want to know that I'm wrong. So, it's changed my life in that I left my career in advertising and market research.
Mm-hmm.
My passive income offsets most of our other income.
Nice.
I'm able to spend more time with my family.
Mm-hmm.
I'm able to do exactly the things like this that I love to do.
Right, exactly.
And then I outsource what I don't love to do.
Mm-hmm. Yep.
And so, I have a teenage daughter and it's enabled me to just be here, be here for her, and my stress level's way down.
Yeah.
You know?
Yep.
Way.
Yeah.
And most of all, I'm building generational wealth.
Yeah, which is huge. Something to pass on to your daughter.
I mean, I had savings because I did everything you're supposed to do. Of course, I had savings, but not like this. Not like, it grows, we sell it, it's gone up almost all the time, but you don't buy it for appreciation.
Exactly.
It's even worse appreciation. You need to have multiple exit strategies. And if there's not a multiple exit strategy, if something's dependent on a refi or something like that, you gotta have all that negotiated ahead of time before the deal commences. So
yeah. Oh, I totally agree. One last thing, I guess, if you could have one takeaway for our audience to absorb from this show, what would be the one thing that you really would like to hammer home for people?
Keep an open mind. You're not getting the full story. And I don't believe we're getting the full story about very many things at all.
Yeah.
And, I won't go as far as to say that we're being lied to. I'm just saying that people have an agenda. There's no, everybody does. And if they're not willing to tell you their agenda,
right,
then my agenda is when people read my book and when people call me, it makes me very happy. And when people invest in some of my deals or other people's, even if I'm able to help them, it makes me really happy. And all of us make money. And that's my agenda.
Oh, you can tell you're passionate about it, especially the new book, Hidden Investing. It's a great title because that's what it is. For most people, it's a hidden form of investing.
Didn't know. I have an investor that put $500,000 in an annuity that pays 1%. Are you kidding me? Oh, but it's guaranteed. I'm not going to lose my money. Oh my God.
Yeah. Before you
get out of it,
inflation, right? I mean, you're losing for sure.
Actually, I think it pays 7. Pays 7, but it's taxed to the gills, and she can't access it, and it's just it's a mess. And she dies, nothing goes. She dies, it's gone.
Wow.
Are you? It's unbelievable. So
yeah.
So there's all the kind. You gotta really.
There's better ways. Absolutely.
Well, yeah, and the fact of the matter is, yes, it's guaranteed.
Right.
As long as she's alive, she is not going to lose that $500,000, and she is going to make $7,000 a year that she's going to have to pay full boat taxes. My $7,000, I deferred the taxes. Let's look back, and it was less than.
And with the way they've been printing money, I'm sure taxes aren't going to be going down.
Yeah, $500,000. So I lied. It's $35,000 a year that she's got to pay taxes on, but all because it's $500,000. But you could done the same thing with apartments, and that $500,000 is never going to grow.
Exactly. Yeah.
So that's 7%. And you have to understand that every dollar that the U.S. government prints makes your dollar worth less.
Yep. That's why it's great taking on debt, because you're paying it back with devalued currency. It's a great concept.
They're going to get their tax money back, and they know it.
Exactly. So,
yeah.
Well, Holly, we're into our 5 to Thrive portion of the show.
You got it.
Basically, just a fun word association game. I'm just going to throw out, rapid fire 5 words to you, and just give me back the first word or phrase that comes to your mind, but you cannot repeat the answer twice.
Go for it.
All right, ready? Here we go.
Yeah, I'll try.
The first one is syndication.
Apartments.
Passive income.
Apartments.
Yeah.
Hidden investing.
Yeah, there you go. Risk.
The stock market.
I figure you're going to say that. I agree. Wealth.
Robert Kiyosaki.
And hidden investing.
Opportunities what the wealthy do that nobody knows about, nobody tells us about.
And I would say a must-read book for anybody watching. So definitely worth the read.
Thank you. I appreciate that.
Well, Holly, thanks so much for coming on. It's been an absolute pleasure, and Thanks for being here.
It's a fun time. So thank you so much.
Yeah, thank you.